So I hope you're ready to hear a little bit about the business end of big data. In the 1960s, there was a Senator, Everett Dirksen, that was reportedly to say, $1 billion here, $1 billion there, pretty soon you're talking real money. Now we hear about trillions when we talk about credit card volume, the national debt, bailouts. But we're going to be in the territory of quadrillion for the next 15 minutes. That's a big number. Seldom heard, especially with a dollar sign to the left of it and with risk to the right of it. We're going to talk about money, about systemic risk, and about government as a listening post and a regulator and a financial stabilizer. And we're going to talk about data on this scale. I'm about to be joined by two really interesting people. Donahue is the CEO of the Depository Trust and Clearing Corporation. Most of you haven't heard of that organization down on the southern tip of Manhattan, but I assure you it is the closest thing the nation has to a data utility for financial data. You're also going to hear from John Battega, who is the Chief Data Officer of the Federal Reserve Bank in New York, the central bank for the country, essentially. These two people, in many ways, stand at the intersection between the Capitol Hill, Wall Street, and Silicon Valley, or as I like to think sometimes, the ghost of Capitol past, present, and future. And we're going to talk about a legislative creation called the Office of Financial Research, mandated by the Dodd-Frank regulatory reform. And I think you're going to find it very interesting, not only as data scientists, but as citizens and people with a stake in the financial stability of the country. So please join me in welcoming Don and John, and we're going to have a conversation here for the next 15 minutes about OFR.
You're supposed to be there. Why, thank you, Mark.
You're welcome.
Thank you, Mark.
Thanks, John, for being here. Don? I'll let you introduce yourselves beyond what I've already said, and let me just start with you, John. And first, you're one of the first people, as far as I know, that had the title Chief Data Officer when you were at Citibank. And now you have that title at the Federal Reserve in the public sector. You're also splitting your time between the Fed, right, and Treasury down in Washington, here in New York and in Washington, working on the OFR project. So what's the Chief Data Officer do at the Fed?
Well, thank you, Mark. And just to keep me out of trouble back at the office, what I say are my comments and not the comments of the Federal Reserve, the U.S. Treasury, or any other organization that can get me in trouble. Let me describe what I do as the Chief Data Officer by describing what the CDO is not. And what the CDO is not, it is not the CIO. It doesn't compete with the CIO. It doesn't attempt to replace the CIO. The Chief Data Officer is a complement to that role. The CIO is responsible for technology implementation. Think of the Chief Data Officer as someone who must understand technology but looks at the business side of data. And if you think of the business side of data, you think of the data supply chain. So if we look at that objective, to get data from the authoritative source to the consumer, data has to be acquired, has to be processed, cleansed, persisted, maintained, and then distributed, and then consumed. And often that's forgotten in that chain. I like to describe it as crushing the grapes and weeding out the bad grapes and making a good bottle of wine and giving you the bottle of wine without a corkscrew. You have to be able to consume the data after it's been gathered. If you think of that kind of path, what the Chief Data Officer is the executive responsible for the vision, responsible for the governance, and things like the funding and the prioritization of those functions within a firm. And that's happening. I had the opportunity to do that at Citi. I'm working now at the Federal Reserve Bank of New York in the markets division. And what's interesting is it's a growing discipline and a growing role throughout the finance industry.
Thanks. So you're also being loaned by the Fed to Treasury to help get this Office of Financial Research off the ground.
Yeah.
So what's the vision? Explain what the OFR is then.
Sure, Mark. The first thing I discovered is when you're loaned to another agency, it's not a part-time job. You now have 2 full-time jobs. So I spent half my time in Washington, half my time in New York. The OFR, I think, is a very unique office. Technically, the definition is under Title I, Subtitle B of the Dodd-Frank Act. It is the creation of an executive agency to collect and standardize data on financial firms and aid and support the work of the federal financial regulators. Think of the office as, I don't want to use the word utility, but as an opportunity to realize efficiency within the regulatory community. If you think about following 9/11, and the thing that was exposed prior to 9/11 was in the intelligence community we had multiple agencies, and they weren't doing a very good job of sharing information amongst themselves. This is a very similar example within the finance space. We have many, many agencies, very, very dedicated people. I came from the private sector, so going into the public sector was an eye-opener for me to see how dedicated the folks are in that realm and how hard they work to try to do the right thing for the economy, for the country. But we have so many different groups, it's sometimes hard to share that data between them. That has greatly improved, but what the OFR is going to bring is an official office that could gather this information, not collect the information that's been collected already, but identify the information that's collected, look for the gaps, fill those gaps, and create a utility, if you will, within the regulatory community to be able to share that data. Now, the other very important role of the OFR is to perform analytics and look at the financial stability of the economy, systemic risk, and look at its impact globally. So 2 very important roles. Very excited to be part of that effort to help stand that office up.
All right, thanks. So, Don, you work for DTCC. I remember talking about DTCC co-presenting with one of your staff at an international conference. And I know for a fact it was the first time I ever typed the word quadrillion when I was preparing the PowerPoint slide. DTCC's been part of the economic fabric of the country for a long time. I'm going to guess that most people don't really know what it is. Is this something you could call a national data utility? Is this big data?
Well, it has elements of that. I think we can come back to it. We have deliberately cultivated people not knowing who we are, and Mark actually gave our location away, so I have to talk to him about that later on. DTCC is basically the principal market infrastructure that supports the processing of pretty much all the financial, the securities transactions that take place in the United States, and increasingly financial market transactions that are taking place globally. Last year, just to give you a sense of scale, as Mark indicated, we cleared and settled about 1.7 quadrillion US dollars worth of transactions, and that was just part of our activity in the market. We also had a number of other processing tasks that we undertook with respect to financial assets even beyond that number. We've been around for 40 years. We are obviously very much at the crossroads of all of the financial activities that go on in the United States with respect to the securities markets and increasingly, as I indicated, a global role in that space as well. When you're sitting at the crossroads, you obviously have a bird's eye view of pretty much all the relevant financial data in your space that someone like the Office of Financial Research would be interested in. DTCC currently holds, for example, about 3 petabytes of data about the financial activities of our members. So one of the challenges is how can we figure out how to leverage that information, that data, in support of what the OFR is trying to do, in support of what the regulators are trying to do in overseeing systemic risk, obviously a critical task given the lessons that we learned over the past several years. We have something that is actually already in operation with respect to OTC derivatives, where we're giving global regulators, in this instance, views into the databases we have about OTC derivatives activity, and that's a global database. It's not just a U.S.-only database. So we have about 36 regulators around the world who today are coming in and getting real-time access to what kinds of information, what kinds of transactions are their regulatees doing, and what kinds of risks are those transactions presenting that we need to be concerned about. So there's a model in place for how that can work, And obviously it's something we are very interested in working with the OFR to see how we can extend the scope of that model into a broad array of other kinds of financial data. One of the issues you're going to have, I said we were a principal market infrastructure, but we're obviously not the only one here in the U.S., and obviously when you look on a global scale, there are a number of infrastructures around the world that are involved in these kinds of activities. And to understand, I mean, John correctly said the OFR's interest in the Financial Stability Oversight Council's interest is the stability of the global financial system, right? Financial markets are global today. They're not regional markets anymore. And so to understand what the stability of the system looks like, you have to have a global view, which means you need to look into multiple infrastructures. And of course, right away, that gives you the issue of how do you correlate the information from one with information that you're deriving from another. Again, to give you a brief example, we recently gave some regulators information about credit default swaps on Greek sovereign debt. You can imagine why they asked us for that information, or I should say data, because it's data. When you're looking at the credit default swap piece, you have to take that data and correlate it with data about the firm's actual positions in the underlying Greek sovereign debt instruments to really put that together and understand what the exposures are that you need to be concerned about. And that kind of correlation is going to be a key element of what the OFR needs to do as it stands up. One piece of work that's going on that we're very involved in support of that is to create something called the Legal Entity Identifier, or an LEI, that identifies uniquely every financial institution that is active in the global securities markets and the global derivatives markets. We, working along with several partners, including SWIFT, the Belgian banking cooperative, have put together a proposal that's been endorsed by financial market associations around the globe on how to proceed with creating a utility to create standard LEIs. So you'd have a unique identifying number, you'd have basic identifying detail on every financial counterparty around the globe, every institutional financial counterparty around the globe, so that you can then tag the data about activities with that LEI and use that as a way of kind of correlating all these pieces, which is going to be a critical piece of what OFR has to do. That's something that's going to take about a year to make fully operational once it gets launched. We think we'll have the first batch, or can have the first batch of LEIs available for some reporting requirements that are coming in Q2 of next year. Obviously, we're not across the bridge of actually having pulled the trigger on launching that. There's still some global issues being worked on before that's going to happen, but we're expecting that to happen pretty quickly.
Thanks. So entity identifiers is something we've heard about in the summit already leading up to now. We've got the data. We're working on identifiers. John, what are we going to do with the data? What's Treasury going to do once the data's collected? Is it just the regulator that's going to benefit, or to make them better at regulation, or is there a wider audience for this?
Let me try to answer that question with just a quick illustration and go back to what we just experienced through the financial crisis. The best way to describe it, and this is a realization I think both the public and the private sector has finally gotten their hands around, is when an airplane goes down, do we put our finger in the air and figure out what the wind was blowing, or do we look for that black box? Very similar to what we just experienced through the crisis. The need for granular data has now become more apparent to both the private and public sector. So when we think about, and this is, I think, very pertinent to the conference that you're attending here over this week, the amount of data that we now need to look at, to gather and to mine through, is going to just go up exponentially. Gathering the actual detailed transactions, the activities, is what the OFR intends to gather and pull in, and then make that data available to economists, analysts, and decision makers as we look at the health and financial stability of the economy. Think of the crisis when Lehman Brothers collapsed. Banks actually had a difficult time understanding their exposure to Lehman, and this goes to the point that Don just made on the legal entity identifier. Not having a standard identifier to be able to identify. Now, Lehman is not just Lehman. Understand Lehman is 100 companies or subsidiaries. So being able to look at your books, and banks hold billions of dollars of positions, to be able to weed out which one of those were held by a Lehman entity, and was that entity bankrupt or not, was a very difficult thing to do. Banks were somewhat okay within their silo, but now I have to talk to the bank across the street or the bank overseas. Not having that standard really hampered our ability to understand what our risk was, and you saw the consequences of not having a good handle on that. Same is true in these complex financial instruments. They talk about mortgages and complex mortgage instruments that are derived from those loans. Not being able to identify the underlying loan, having true transparency to the data, hindered analysts' abilities and banks' abilities to understand their risk. So kind of a long way around the answer, but to be more specific, what the OFR hopes to provide as a benefit is not only to the regulatory community and their job to provide supervision and oversight, but also to the banks and the financial institutions themselves to improve the quality of the data. Bottom line is we've got all the data, but it wasn't actionable. We couldn't aggregate, we couldn't process, we couldn't look through it. By introducing standards, and Mark, you referred to XBRL, one of several very critical standards that are needed in identification and transport of data. The OFR is sitting in the middle of the regulatory community, and by the way, supported by the private sector too. Private sector is very interested and have been very cooperative with our efforts. There's going to be a benefit across public and private and within the United States and across the globe.
Thanks. So just to pick up on what you said about standards, all three of us our paths have crossed many times on standards in the past. And it's been a privilege to get to work with you on these things. But, Don, is this aligned with what industry's been working on? Industry's been pushing on the standards front for a long time. Does this help drive that, do you think? What kind of impact do you think OFR is going to have?
I think the impact's going to be huge. I think John very correctly said, look, the private sector has been desperate for this kind of thing for years, right? But making the business case to invest in standardizing legal entity identifiers purely from the private sector's perspective was a push, right? It was not a slam dunk. It was not an obvious business case. When you extend the scope of this and start talking about asset reference data, right, the description of financial assets, the identification of financial assets. John and I think both painfully remember how many runs the private sector alone had at that particular issue. And again, the level of investment required to create it, the level of investment required to adapt to its use in all the systems was really staggering. I think this is the tipping point, and one of the really critical things that OFR brings to the table is that it changes the momentum to, I think you have global agreement now that, look, it's time to deal with these issues, right? Global integration has proceeded to a point where we can't survive if we don't deal with these issues. But it is very much beyond some of the immediate, the standard descriptions, the standard entity identifiers. It's the broader issue that the massive amount of data that each of us deals with in our own business spaces, that having that data accessible largely only in a form that requires a human interaction to do something with the data. We are way past the breaking point, right? As John correctly said, you can make a very good case that one of the precipitating factors for the financial crisis is the massive amount of data that was needed to understand the instruments that we were trading and the kinds of financial activities that we were undertaking. That was impossible because it wasn't machine readable, it wasn't machine manipulable. People had to sit with a prospectus and read through those things. That doesn't work anymore, that can't work. Yeah. So there is a real industry push to use markup languages, right? To use XBRL, to use XML as a way of tagging data in financial flows inside a particular instrument, right? reporting into the market financial data. Issuers today in the States now use XBRL tagged data to give their basic financial information to the markets. We're trying to extend that to say pretty much all of the information an issuer feeds into the market needs to be tagged, needs to be marked up in some form. So there's a lot of work going on in that space that clearly will be continuing in the coming months and years. And I think the OFR has given a real, very, very useful and beneficial push to that effort.
Well, thanks. There you have it. Big data in the finance space as sort of a safety belts on our financial future and stability. I really want to thank John and Don, and thank you all for your interest, and watch this space. Thanks.
Thank you.